Good morning, everybody. I never went on a first date with Tarable Chakuseki. Rude. What? No, the electric company only got me once this week. YouTube went down on Friday. That wasn't my fault. I'm black and blue from last week. It's alright. You'll get over it. As financially ruined as you currently are, things will get better. Good morning. Fuck. Break time? Oh, okay. That sounds like a great idea. See you Monday, Bad Bones. Did I hear financial ruin? Yeah, no problem. Morning, everyone. All right, so what are we talking about? Things are looking up or down. I liked the price action into close on Friday. Um, Still have to see what happens with futures tonight. Lots of chatter that Jamie's going way down. I kind of disagree with that. I didn't sell CCs on Jamie on Friday because the market started to bounce. What's up, DV? How you doing, man? Quick analysis on Rev and expectations for next week. Okay, I mean, I don't know if I really have any expectations for next week. We don't have any news coming in. With the market bouncing, we should see some active funds buying back in that we've been seeing kind of slowly sell off over the last 2 days. You know, remember, Revlon's not part of ETFs, right? But there's still a lot of mutual funds that actively trade that own it. So you have two active funds. You have mutual funds and ETFs, right? And these are going to be the primary. I mean, you have hedge funds and day traders and stuff like that that are also active, but their effect is even more muted. Both of these, if they track an index, right? In this case, the Russell 2K. When the Russell goes up, they buy the stocks in the Russell. When the Russell goes down, they sell. Obviously, Revlon is not supposed to be in any ETFs, but it still is in about like 15 or so mutual funds. Their holdings are much smaller than an ETF would be. And they probably trade a little less actively than an ETF would, but they're still there. So something to consider. So we won't react to a lot of movement in the market, but we'll react to really strong movement in the market because we'll see more volume come out of these smaller mutual funds. So, very rarely will you ever have a stock that's completely detached from indices, unless it simply isn't in any. That's something you more or less see with like OTC stocks and stuff. But Revlon looks okay. I mean, it's still significantly above even the tighter trend lines, right? It's holding the volume, like the more volume back trend line here. And it's still way above like this one, you know. Back after the first run, my price target to get back in was like $5, 5.25. We're actually starting to approach that for the first time since we started playing Revlon, which, you know, I know for some is very disheartening, but I actually don't mind getting it a little cheaper and getting an opportunity to average down. Usual suspects do an Elliott wave and TA to predict sub 20 stuff. You know, it took some digging on GME to find a fucking support that had any relevant volume that could support our price action over the last few months. Um, Especially with the split, but I think this trend is pretty solid on the low end. I mean, obviously not good that we've hit it 3 times in the last 3 months, 4 months, but it's there. Bouncing off of it seems important. Dropping below it seems really fucking bad. Thanks for your stream. Thank you so much, Dan. I appreciate that, dude. What should we expect if Rev gets delisted? There's a number of things that could happen. It'll either move to like OTC or pink sheets. They could delist the stock entirely. I'll probably have to dig into some stuff with the options chain. I mean, like options don't just get canceled, but they can. So I need to, yeah, I'm gonna need to dig into it a little bit more. It won't be delisted immediately. They come to a decision, and it takes quite some time for that decision to be reached. I mean, obviously, it's in Revlon's best interest for them to stay listed. They'll have to present a business plan, probably the same plan that they presented at their investor, like the same plan that they presented to get the loan. Um, you know, Revlon is really hurt by supply issues right now. It's one of the reasons they're filing Chapter 11 in the first place. They're not able to meet their orders. So they actually have plenty of orders, but they're only meeting like 70% of them right now. Um, and a lot of that's due to, you know, the supply shock that we've been experiencing for the last almost a year now. With the huge economic news out of the way, do you think we will bounce and then stagnate or leg down further without any new catalysts causing it? I don't think we're going to leg down without new catalysts. We had a PPI flash report on Friday that was not bullish, but it was moderate. Um, you know, on SPX, SPY, Dow, NASDAQ, QQQ, you know, you name it, name the index tracking equity. There's a massive amount of put exhaustion. So like most of the puts that are bought are now at, like as of Friday, we're in the money, right? I think we started to see some of those sell off at the end of the week as they approach expiration. But the bigger problem is that futures are not pricing in positive price action on the SPY. So we really do need, I think, some bullish news to catalyze a serious bounce. But I don't think like moving back up to like 3,900 on put sell offs and repositioning is out of the question. Can you talk to YouTube about all these ads? It's getting out of hand. I don't even play them. So if there's ads, it's just YouTube playing them. I can't do anything about that. Even if you like demonetize your content, they'll still play fucking ads on it. They're just trying to sell you on YouTube Premium. Or just get ad block, right? The pound's down against the dollar pretty badly. So's the euro. So's the yen. So's the yuan. I mean, there's none of the none of the like weighted currencies against the dollar are doing very well right now. It's really bad for, companies that do foreign trade and for foreign companies. Long term puts on the VIX yet? Or give it another week to find higher? Um, I sold a bunch of my VIX calls on Friday because, VIX surged pretty hard. I would say puts are kind of risky right now. I think volatility will stay pretty elevated. It'll be hard for them to slam the VIX back down. That would take quite a lot of effort. Maybe like almost as much effort as the last like big bear rally we had. So back under 30, probably back down to like 20. Doesn't look good right now. I would probably just use any drop in the VIX as an opportunity to reposition calls and stay long volatility for the time being. I want to talk about cat. I think the markets can drop harder by next week. I mean, they absolutely can. While GME looks kind of stable on this long-term support, or at least like it found some stability on it. SPX and SPY still look pretty fucking terrible, and they have plenty of room to the downside before they hit their trends, right? This long, I don't have it drawn on this one, but I have it on SPX. There's a long running trend here. Well, not quite so low. And that range is still below like 30 351, or over here on SPX like out here probably like the 3500 range. If we do get a higher low here, that's quite good and could, help us out. But I think to confirm a rally, or at least a brief one, we want to see a move back above like 3800. Seems like the best is to be at the money or near the money. Cat looking tasty. Yeah, it does. It looks quite good. Nice bounce on Friday. Dipped a little bit below this bottom trend. There have been some insider sales from Caterpillar, which, may be leading to a little bit, a little lack of confidence, right? But I think overall insider ownership in Caterpillar is still very strong. The bounce here looks good. I try to target, depending on the length of time, within like $5 of the current price. So Friday I bought some 170s. The day before I bought 175s and some further out 180s. If you're very near the money and you've actually confirmed a bounce on Cat, which this is kind of questionable, I'd want to see it move above 167. You can buy at the money like 30 DTEs. But usually I go like 60 or 90. Just to give it time to, because it can stagnate at levels for really long periods of time. Here. You'll see it pretty frequently on Cat, or it'll like trade in a very tight channel for a long time, which obviously isn't good for your theta. So it's good to have a lot of theta on it, but when it does move, it usually moves pretty fast. Delisting pretty unlikely. I mean, delisting's random almost, right? It's decided by a private committee that weighs, the evidence against delisting and makes a determination. It's, unfortunately not up to the investors or the company very much. Do you have any recommendations for books or reading material on day trading the SPX? No. I mean, understand the support and resistance levels where they're strong. Uh, Understand like options positioning by looking at the OI every day. And you too should be able to trade the SPX. It's not very complicated. There's a shitload of books on the subject. They're all garbage. Pickle's picks the last couple of weeks are kind of rough. You mean the last week? It's just last week. It was just the OPEX picks because there was no OPEX. I'm using it as an opportunity to practice getting better entries. With that said, what do you think went wrong this time around? There was no OPEX. It's pretty simple. I picked a bunch of OPEX stocks. There was no OPEX. They're for paper trading. Thoughts on GDP revision coming up this week and what effect that might have on the market? It could be bullish if growth is better than expected. I don't know how bearish it'll be if it isn't. I think the expectation is already gonna be skewed towards, a bearish result, right? Do you think supply chain issues will be resolved soon? 6 months, maybe? Tom has me worried about the potato market. Fucking potato Tom, man. I'm kind of loving premium, to be honest. Convenient. What about the Dan's unit of currency, handies? Strong as ever. Interestingly, handies do really well in a recession. What's your take on the bond market slumping along with equities? I thought these two were negatively correlated. They're not. There is a liquidity crisis. I mean, you can just look at like SPY volume on the weekly and you can see that something is wrong, right? Like volume has continued to grind down since, Jan of this year. It's just terrible, right? Like this week might have been the highest volume since Jesus. It's been a while. These last 2 weeks. Which means we're finding sell side liquidity, which is, you know, indicative of a big downturn. So long term, still extremely bearish. Short term, a little bullish. But yeah, the bond sell off, treasuries are starting to sell off because don't forget that, Bank of Japan has pushed into the FX market to try to pin the yen, which is kind of step one of them beginning to sell off US treasuries, right? Which is, will be better for foreign trade, but, really, really fucking bad for the dollar in our markets. Yeah, it does depend which currency they trade in internationally. Would you be looking at December, Jan expiries on the VIX now as you reposition VIX long calls? Or are you just taking profit and repositioning your short-dated speculative VIX position? I'm repositioning the short-dated speculative VIX position, but it's very likely that I will reposition my hedge as well. If I'm repositioning it, I'm going to reposition for probably Feb or March of 2023. Do you think before the October 13th meeting for Rev, we could see an IV bump going into the meeting? It's very possible. We could see speculators come in based on moving in for the announcement from the meeting, right? A Fubo chart. Fubo still looks fine. Holding its uptrend. I mean, accumulation still looks strong on it. We've got a really nice turnaround here. We'll probably move up, I don't know, in the next month or so to another test in the $8 range. I would take advantage of these low fucking prices you're getting again. You know, after we had that kind of rally over the last couple weeks into the $5 range, you know, 4 is looking very attractive. I'm probably going to average up. I'll watch this. I mean, if I feel like it's going to be rejected and come back down or slump lower on the trend, which it could, right? There's some range here. Let me try to move this out a little bit. So, you know, we could see as low as like 380. Any prices in like sub $4 are amazing. You know, because even based on my, you know, long-term valuation analysis of Fubo, you know, a $4 entry is still, you know, 1 to 2x in like 6 to 12 months. Obviously, they could beat expectations. Can you take a look at AMD? Yeah, absolutely. I've been averaging that down. It's one of the positions I continued to carry over into this week. AMD did fall below its long-term trend. Just a little bit. And, you know, you could argue that maybe I was a little greedy with going so far back, but you know, this range doesn't have a lot of historic support, which I kind of don't like about it. You know, the next big support's down here at like 58, 55. Hopefully with the market rally, we see a turnaround here, and this breakdown was just volatility, right? I think we did start to see a turnaround on Friday. That's very good. I will probably be targeting, you know, 73, 75 additionally, and averaging down my $85 calls. I think if AMD does start to move up, it's primed to move up very, very fast. The gamma flip point on AMD is at like an obscenely, hold on, let me, it's like obscenely high. I'm gonna look it up for you guys real quick. 1 second. Yeah, so I think the gamma flips at like 75 right now. And on the Greek like neutral side of things, AMD's like the almost the furthest it's ever been away from like delta neutral, right? Yeah, delta neutral's at 83, gamma neutral's at 80, gamma max is at 132, and vega neutral's at 94, 96. So If it does move up, it looks really fucking good. But I usually tell people to get some time on AMD. It's very heavily shorted. And you don't want to get stuck. You don't want to get stuck with like not enough theta, and you run into a lot of short pressure. It's very liquid and probably has about as much short interest as a mega cap can have. With your earlier comment about Rev considered, when in October do you see the most potential for our next run up? Or is it further than that? I mean, I still think like the 13th and the 24th will be the most likely dates to see movement on Revlon. We have ETF FTDs kind of across the basket. And those will be coming in. Oh, let's see here. I marked it for GME, I think. Those will be coming in from October 6th through 14th. Oh, and additionally for GME, XRT will be hitting its 13th day of threshold on the 11th, which is kind of right in the middle of that. I answered that before, I think, Autist, formerly known as AJ. More speculative positions, I would reposition, as the VIX drops. Obviously, I'm not going to do it right now. I'm just going to take profits. The longer dated ones, I'll probably be looking out into like March or June of next year. Like that, my hedge, I'll be rolling out. Well, pulling it back Friday and probably tomorrow, and then looking to reposition it out further, hopefully on a rally in the market. But generally 60 to 90 days. In a bear market, even more theta. Remind people that your financial situation is different than ours, and you can afford to take more risk. I feel like people know that. I've said it enough. I profited this apex. Wait for the low IV dip and wait for the low IV and dip a few days before OPEX. Yeah. I definitely could have sold my October calls for like 70% gains if I hadn't waited for the full T+2 to play out. But the risk reward ratio for me is worth it. If it does run and I have exposure, then I make a shitload of money. If it doesn't, I lose very little. Yeah, ghosting anybody is a terrible fucking idea because nobody's portfolio or risk tolerance is the same. You can't really ghost me. You don't have visibility over all of my accounts. It's a terrible idea to try to ghost someone. Can you go over selling CCs with a high cost basis on GME? Yeah. What do you want to know about it? I mean, you just sell covered calls. Your cost basis is not that relevant, right? If you're selling fairly risk averse calls, low delta, then you don't, and you have an obscene cost basis. Like, say your cost basis is like $40 or $45. Obviously, selling those that high is ridiculous. Just hold on to your premiums. Make sure that you can buy back. Don't sell too much theta at once. You need to find a balance there because your cost basis is so high that, you're not going to really reduce it by selling calls at your cost basis. So if your goal is to reduce the cost basis of your shares, you're going to have to take more risk. A slightly risk averse way to do that would be, to offset your strike by the premium received. So, if you're receiving like $10 of premium or 10 cents of premium, at your cost basis, but below your cost basis, maybe you'll get 20 cents. You can factor that in. So like if your cost basis is 40 and this is the 39 strike, your risk there is that you would sell at 3,900 plus $20. So you're taking an $80 risk, right? Does that make sense? On assignment. If I had like $40 cost basis, I would still just be selling like 0.1 or 0.2 delta calls, right? Because I'd want to lower the cost basis as quickly as possible. Also, going back to the long dated near the money option strategy on GME at these lower price points versus Freg's Day prices. I mean, at the money, well, near the money leaps on GME are very cheap right now. When IV's, I prefer IV in a slightly lower range than it currently is, but when IV is sub 100, generally it's not a bad time to load up on leaps. I don't buy them because I don't really want exposure for that long of a period of time, but you can. It helps you. It helps you outlast any you know chop or short term like accumulation periods where we're kind of just waiting out price action. AMD just lowered prices in response to Nvidia saying don't expect Moore's law to keep up with chip manufacturing. Yeah, I mean there's an upper limit at some point. I don't know if we're there yet, but when positioning your VIX hedge in Feb March, do you buy at the money or in the money? In the money. Fubo for life, or at least until profit taking. What's up with M? I mean, M's definitely in the lower range of its risk. If it falls much further, I'm gonna cut it. It does. It's M is like an OPEC stock. It's part of XRT and all of that. But it also runs independently of OPEX. It has more stable price action. They have a dividend. They have they're more of a attractive investment for long term investors, especially moving into a recession. M's done pretty well in recessions in the past, and so I think they've already pulled back a lot of their speculative earnings talk, and I think that was responsible for a lot of this, drop over the last few quarters. They've been pretty bearish on their projections, and so I think if it can hold this range, it looks good to start seeing some more investment capital come in, and that'll obviously lead to price improvement. That and the options chain is well suited for a rise in price as well. I think Gamma Max on M is still above 20. So again, another play where if the market turns around, we're likely to see some decent price improvement. WFG, do you think it can move up to the 80s? I mean, it's extremely cheap right now, I think, right? Or it was, yeah. Maybe, although I don't see demand increasing on lumber anytime soon, especially as we move into the winter. Seasonally, I don't think the winter is very good for lumber usually, right? Like 2022 was kind of an exception, and there's, I mean, plenty of room to the downside. But construction's going to slow into the winter, and if demand's already low, with housing inventory opening up, obviously there will be less building of new homes. Can you talk about Upstart? Yeah, I'd love to talk about Upstart. So Upstart Friday had a very nice bounce and turnaround. Obviously at an all-time low, which isn't great, but um, I think it's an all-time low, very close to it, right? Where do I go? Yeah, they're pretty much at an all-time low, and very close to its like IPO price or the low end of its IPO price. Uh, Maybe just below it. Um, I like the turnaround at the end of the day. That was pretty good. It hasn't fallen too far below my risk. I bought 5,000 shares of it on Friday at 27.50 with $3 premium. Puts are still very overpriced. So excellent opportunity to sell CSPs, especially here at the bottom when it's unlikely to drop significantly lower. Um, Still on reg show and now 13 days in, so that means that any shorting done on it is going to generate further obligations into the future. I'm going to continue to buy December and January calls. I will possibly roll forward my August or my October 35s and try to target the $30 to $35 range for November. So I'll move October to November, add to December, and add to January. Yeah, Macy's has been doing really well on revenue because they're discounting a lot of merchandise. So people are coming in and shopping. They've got customers coming in. But remember that their margins on that inventory that they're selling are shitty. So it looks bullish, but even they, kind of spoke against how bullish it looks and chose to, downgrade their earnings expectations. So but I do think it's priced in largely. Like a lot of the negativity in they've priced in themselves. They're getting ahead of that drop in the market, and that's good. It's good when a company comes out and does that, because it gives you an earlier opportunity to get in on it. Also, IV on M right now is like at historic lows, which would obviously pick up if it started to drive up into any of the call volume on its chain. Is now a good entry on Halliburton? Um, Maybe. No. Oh, that's not Hal. Ooh. Um. Hmm. A lot like BTU. I mean, 20s really nice. I don't know. I mean, like, I don't think you're gonna get 18 again anytime soon. But it'll probably defend heavily on oil pricing, which has been kind of stagnant. Um, just under 80 a barrel now. I do expect another rally in oil. I'm just not sure when it's going to come. Probably a couple months. This is probably a great opportunity to get in on it, though. What's your outlook for Fubo if the market comes down significantly in the next few months? I mean, there's just not that much room to the downside on Fubo. If the market does drop hard and there's an opportunity to enter it much cheaper, save some money for that. DCA, it's supposed to be a long-term investment, right? I'm not playing it for like a squeeze or OPEX, not yet, right? If I start to see, positions picking up on it and it's looking more and more like it can OPEX and move back onto those volatility cycles, then obviously I'll play shorter term, more speculative positions. But right now I'm just averaging down, right? So if you're averaging down over time, and there's the market crashes, I think the company's well positioned to withstand a market crash. I don't think they'll go out of business. And I think the pricing models they're looking into will be very beneficial for them moving into a recession when people don't want to expend as much money on subscriptions every month. The popularity of sports during recessions tends to pick up, so that's really good for them. Gambling obviously picks up during recessions, also good for them. But think about it this way: one friend in a group even orders Fubo and gets like the full package, and everybody goes over to his house every Saturday and drinks beer and fucking gambles on sports and hangs out, right? Versus, going to a bar or a restaurant where they would spend more money. And in a recession, the former is more likely. It's just so it looks good to me, honestly. And with so little downside there, I'm more than willing to just keep buying more of it. Do you have any thoughts about a downturn in the dollar? I mean, if Japan starts to sell off treasuries, we could see one. Otherwise, it's just been rocketing, right? It's at like 113 right now. It's just shooting up. Yeah, I know you can click auto. Well, point two delta is justice is 20% chance of it going in the money. I can give you some tips, right? There's a few things you can do to protect your covered calls. One of them, don't use your premium on other shit. Consider your premium like a credit, which it is, right? And hold it until the option's gonna expire. When the option expires, that's cash. After that point, that's cash in your pocket. And what I really recommend that people do is save that premium for a few weeks, let it build up, collect like a small little nest egg that you can use later to protect your covered calls, right? The other thing I would say is watch for turnarounds in volume. So turnarounds that are volume backed and whatever stock you're selling on are dangerous. So if you see a bounce or something like that, and volume picks up on that bounce, so if volume is declining into the bounce and then volume picks up on the bounce, it's usually a good idea to buy your cover calls back. Wait it out, see what happens. Usually IV will uptick on this and you'll get another opportunity to sell them in the future. The third thing you can do is if a stock moves unexpectedly beyond your strike, you can buy calls out of the money So, you know, say this is 30 and it moves up to 32 overnight, right? You can buy like 33s or 35s if it's going to keep moving, right? And then when you do get exercised on this, you'll have $3,000 plus you'll have whatever money from these calls when you sell them, and you can most likely buy back most of your position. Obviously, this isn't ideal, but it is a way to protect your shares. Sometimes what can happen there is, you know, the stock moves up unexpectedly. You buy those calls, the stock moves through them and then starts coming down. You know, if you're able to sell these for a profit, even if the stock stabilizes in a higher range, that profit will allow you to buy back your covered call. Can you run down the closeout requirements after 13 days on Reg Show? Does regular FTD obligation happen in addition to it as well? I mean, yes. You know, it's just a continuous closeout of each previous day. So 13 days prior, we'll be closing out on, you know, the first trading day. The second day will be 13 plus 1. The third day will be 13 plus 2, and so on, right? Regulation, FTDs can still be marked long. They can still be pushed out. They can be washed with ETFs. There's a lot of ways to get around Reg Show. The biggest effect of Reg Show on these illiquid stocks, when it's on the stock itself and not on an ETF, is that it forces synthetic shorting. There is no borrow and short of the underlying without a pre-borrow agreement, right? So it makes it very, very difficult for them to short any other way besides a manner that will create more FTDs, right? So a stock, you know, like Upstart, which is moderately liquid, while on Reg Show, will start to build up a higher and higher fail to volume ratio. That's why if a stock runs on Reg Show and they have to use shitloads of synthetic liquidity to stop the run, it's very, very bullish, right? Because that's what happened with GME, and you get a lot of compounding fails. You know, and those compounding fails then compound more because it's still on Reg Show. So it really traps them in that compounding failure cycle. So we'll see how Upstart's doing. You know, on the last FTD report, it was building up a fairly significant number of FTDs. We'll see if they continue to increase. If they do, it's extremely bullish. Thoughts on TCDA for CSPs? CSP return is looking nice. I mean, it doesn't matter what stock you sell CSPs on. What is it? TCDA? I mean, technically it doesn't look very good. Generally, you don't sell CSPs into a downtrend. And this has quite a bit of room till its next decent support, which is down here at like 680. And on a bio stock, which are, you know, even more erratic, that seems fucking terrible. Two good earnings in a row hasn't really done much for their stock price. Risky. I mean, you're likely to get assigned. If you're trying to sell them for premium, gross. If you're trying to sell them with the intention of getting assigned, I don't know why, but good luck. I really don't know what to say there. I don't know anything about the company. I'm not going to do the required research into it. Biostocks require a lot of research, and it makes them terrible candidates for short-term like short-term positions. Fubo doing 4 split screens on one screen is a legit attraction for the purchase of their product. They're doing a lot of stuff. All of it looks really good. We'll see what sticks. Our old friend Rig is quite cheap, and they've had some positive developments. Is it still affected by worldwide macro? Um, I like Rig. I've liked it. I've liked it a long time, but I don't play it as often as like some of you other guys. I know Dunston's still pretty deep into it. Their Q2 earnings are, exciting. The price is probably okay. I just worry that if oil slips more, you could get a much better price on it. Is volatility still pretty good on it? Sorry, my throat's getting really dry. One sec. Let's see. Still very bullish on the call side. Ivy's okay. I mean, worst case, you could sell covered calls on it. I don't think they're going out of business. So there's that. I prefer Oxy. I think it's more sensitive fluctuations and crude prices, but to each their own, I suppose. It's Rig's cheaper, so I understand the attraction. If you have time, Raytheon versus Lockheed. Raytheon was underperforming for a really long time. Let's see. I haven't looked at their stock since probably like March. Short term, they both kind of look good for a bounce. Long term, I'm not really a fan of Lockheed's earnings. Kind of hard to believe they had an earnings miss last quarter. Interesting. Maybe Lockheed's the better deal here. I assume you're bullish on this, but if the market downtrends again, these aren't gonna do well. Why is the Dixie rocketing bad for the economy and world economy? It's bad and good. It's kind of double weighted, right? It makes imports cheaper, It means traveling abroad is cheaper because the dollar is stronger. So, it's a great time to travel and, you know, boosts tourism, generally speaking. Um, Multinationals that do business in the US will benefit from it. And the status as the world reserve currency, obviously, is bolstered, but it's not like it needs that. The bigger problems are tourism into the US from foreign countries drops, right? Because it's too expensive. Um, Exports suffer. Not that, US is leading the world in exports, but it still hurts. Um, any US companies conducting business abroad are hurt because the exchange rates. Um, and smaller economies and like emerging markets are crippled because you know, it requires that they have US dollar reserves um, and are paying more to obtain those dollars, right? I think you answered this before, but what do you use to track spikes in IV intraday? The options chain? Owning calls is a great way to do that. Or watching it really closely. Yeah, I don't think we'll see too much from futures tonight, but I could be wrong. Um, a lot of contracts there are also pretty deep in the money on the put side. So, we could see a rally in futures. We'll see. I mean, obviously there's no way to tell yet. We did get a rally into close. That is generally a good sign. But that may not continue into Monday morning, right? So yeah, we will be watching futures tonight and Monday morning pre-market. I bought a bean to cup coffee maker with a steam wand to replace instant coffee energy drinks. I'm a changed person. 40 times better than instant, worth the investment. Also, Fubo to $8. I mean, I'd prefer Fubo far above $8, but like I wouldn't sell at 8. I might sell some options at 8, but not my stock. How careful to be with selling strangles. You know, at the money, I've been selling like at the money straddles. This week after the $5 move, I've been a little. I'm probably, well, I haven't sold all of them yet, but I'll probably move into a strangle, like 450 CC with $4 CSP. I have my shares are at like 380 something, so I don't give a shit if I sell at 4, right? Like if that happens, so be it. But you can get pretty risky with it because the shares are so cheap. And like we were talking about earlier, if there is a market crash, I'm sure the price of Fubo will be cheap once again in the future. Yeah, rig could slip more. I think it's got some pretty decent room to the downside. I thought it was 2.5 with a 20% return, but yeah, there's a binary event in October with a drug. Okay. I mean that could be good for it or bad. It's just a coin flip based on FDA decisions. I don't know. I can't stand bio stocks. But if you understand the FDA approval process really well, you can make good money there. Somebody 2002 Tacoma for 10K this morning. Nice. Is it worth playing crypto DeFi ETFs or wait until later? What do you want to play on them? I'd wait until they pick up some liquidity. I don't think they're very popular right now. But obviously they probably won't get popular until the next bear cycle in crypto, or bull cycle rather. Which could be a while. Are you looking for like a long-term buy and hold? I don't know if one data point's really I don't know if one data point's really enough to say like LMT is going to underperform Raytheon. I'm surprised that LMT had a missed earnings. Maybe they took on some financing or something. I focus on options analysis primarily because I generally don't buy and hold things. If I am buying and hold something, book value, PE ratios, uh, balance sheet cash flow, like free cash flow. Debt to equity, sure, but margins. Right now, I'd be looking for companies that are already operating within fairly tight margins, because I think they'll get an opportunity to expand, and companies that are operating on massive margins are probably going to contract greatly, right? That seems very important thing to assess from the macro perspective when looking into any company right now. Is really look out for those PE ratios, look out for those margins, because markets are about to get a lot smaller, and efficient companies um, are likely to have a lot more success than big bloated corporations that are running on purely debt, and they have PE ratios of like 20, 50, 100. That's just not going to be sustainable, especially with the Fed moving into an aggressive rate. What do I need in terms of market data to sell CCs? I mean, just get all the free shit, right? I think most of the stuff's free if you're selling like some number of contracts a month. Live options data is good because you're gonna want the pricing. Best way to watch futures. I mean, you can just watch it on TradingView. You'll have a delay, but you don't need to worry about it if you're not trading them. If you are trading them, you can pay for live data. It's like $50. Everything where I can't determine its short-term price movements is a long-term buy and hold. I mean, Raytheon and LMT both look kind of bullish, right? They're in descending wedges, approaching resistance, or previous resistance. That looks good. I mean, they could, and if the market rallies, obviously they're both huge. They both will too. How important is it to Fubo's outlook that Prime Video was awarded the contract to air Thursday Night Football? It actually seems like Fubo is far more focused on soccer and basketball right now than they are on football. I don't think they want to try to, like, with their size. I think it's smart that they aren't really pushing to compete with, like Prime Video or anything like that. But don't forget that, they still have like Fox and NBC and all of that. So, they still have most of the football content. available, at least through other broadcasters, but I don't think it's gonna hurt them. Do you own bonds? No. No, I don't. I'd rather just have cash. Um, so your long-term opinion is on Fubo is that even in a recession, they should hold up well due to their sector of gambling and sports. And even if we crash, they're already close to the bottom. I mean, not only are they close to the bottom, but they're undervalued. I think currently the price of Fubo should be far higher than it is. So I think you're buying $8-9 of value at $4, which is amazing. If you're able to buy it cheaper, that's just an even better opportunity, right? Yeah, if you can buy Fubo under $4, you're killing it. If you can buy it even lower, that's fucking amazing. If Fubo dropped to like $2, I would double my position. And I have a decent chunk of it. I have like 15,000 shares now with leverage on another 25,000, pretty near the money. I could see doubling that if IV got in a range and the price drop below like 350, 328 here. That's really good. Congratulations. Fubo's current book value? Have it written down somewhere. It's probably on here. $330. Thoughts on Sava having a post OPEX bump? How did it do Friday? I really didn't watch it Friday very much. I was kind of busy with other stuff, but it looks pretty good for a bump Monday or Tuesday. I think it's moved up more than enough, and I'll have to look at the OI in the morning, but I planned on buying calls on this. I understand it doesn't usually have a bump afterwards. Like in June, it had very well. That's really not an OPEX run. When was the last time it had an OPEX run? March. March had a second peak. We'll see. I guess it'll depend on how many people dump calls. I can take a look at I guess while everyone's here, I'll take a look at the options chain and see like what expired. See how DPI is doing. Oh, great. No PMI data for Sava either. So pretty strong call gamma at 4150. I guess the issue here would be that it's not very strong beyond that. Like 4250 is okay. 43 and 44 are very weak. 44 or 4350 and 44.50 are weak, and then 44 and 45 are negative. So a move up right now looks kind of difficult, but the gamma hedge is still pretty strong to the downside. And with the bounce at the end of the day, Friday, hmm. Yeah, it's hard to say. I don't love it. It's really risky if the market doesn't bounce, honestly. Did IV price down at all? See, IV's still really high though. And I don't think it broke Gamma Max. Oh, it did break Gamma Max. Ah, yeah, you know what? If it falls below 39.72, I wouldn't touch it. If it's able to hold above and we see call buying come in, that's probably pretty bullish for Tuesday. But it did break Gamma Max, so there's a very good chance that there's, some market maker hedge carryover, but the peak may not be as high as the previous one. So, it may hit like based on the chain right now, I'd say it could hit like 45, maybe 46. No Fubo shares. I've been playing SPX all week. Holy fuck, what a wild ride. Yeah, SPX was awesome last week. It's been a lot of fun. I'm still holding those 3,800 and 3,900 calls. I closed out the rest of my puts on Friday. So I really hope there's a bounce. I hedged a little bit going into close, but those are short dated. So hopefully it just keeps moving up. What's up, Sean? Appreciate it, man. If I think crude's gonna rise in the next 2 months, what are some good stocks to get in on? Occidental Petroleum or oil futures? Thinking of starting over completely after 2 different careers and studying finance at 28. Any tips? I mean, do you want to work in finance or do you want to trade? They're kind of different. I have XPX 2100, October 21, 3,700 calls, fully hedged over the weekend. I think I have 38. Do I have 37? I might have 37. I don't have it open right now. I think I have 37.50, 38, 39. I still have those 39s from the fucking Fed like announcement. I don't know if those will actually ever print, but I don't really care, I guess. I have some puts at 37.25. But those expire Wednesday. So they're not very far dated. Do I have anything else? I think that's it. Just VIX. VIX is the rest of it. I don't think I have anything on SPY right now. No. Trade. Be responsible with it. Save up a lot of money. Practice as much as you feasibly can. Ensure that you're profitable before you fully commit. What do you expect to see price improvement on Upstart? I don't know. I mean, it'll do well with a rising market, but only till about $25. After that, it really needs some covering to push it higher. But I'm getting a lot of exposure over a pretty long period of time, so I think ultimately we'll see some really positive price action. I would say the next most likely window for volatile price action on Upstart will probably be the ETF FTD period. It's like primary ETF was also reg show threshold. And since it's been trading on threshold for so long, you can expect there to be a lot of ETF FTDs into the future. What's up, Tan Guy? Oxy under 60, like BTU under 20. Yeah. Actually, if you can get Oxy in like this range, like 56, or if you get really lucky, like 54, that's really good. Even under 60, it's probably a buy. How are you calculating Gamma Max so unbelievably fast for any stock? Brain? I just use JFresh's brain. Actually, it starts October 6th. Um, but I will say the ETF FTD period generally goes like that. So they kind of pile up into a midpoint. Like usually peak illiquidity is somewhere in the middle range. So they begin to start using ETFs and then the amount of exposure on them picks up and then it actually drops off pretty rapidly. So I would say it's more like this. Yeah, it's not that simple, Stefan. And definitely no. I know you talked about it at the beginning of the stream, but when are you going to do the research on the what if of Rev being delisted? Oh, I'm not sure. I might try to get some of it done today. It's really fucking arbitrary, and NYSE hearings are like kangaroo court. So, there's guidelines and procedures that they follow to a degree, but there have been a lot of surprises in the delisting process that I've seen in the past. And, I wouldn't say be prepared for all eventualities. Maybe buy like leap puts at $1 or something. So to be prepared, CC wise, October 7 is probably safe. Be wary of the FTDs, but likely the following week. Yeah. I would say that's probably the best bet for covered calls is to be prepared or just be ready to buy back the day before, right? Take the risk off the table before you enter the period. And then if there's a run, you get a really good covered call selling opportunity at the peak. If that position has a likelihood to go to zero, I may move all my money into Fubo. Yeah, I mean, that's always been the risk with Revlon. So Revlon has insane upside potential, but it also may just not have any potential at all. I will say, the 400,000 share purchase from Merrill, which is a significant amount of the shares outstanding or the free float, um, is very bullish and a good sign. Although that's like nothing to them. Well, you know what? That's tricky, right? Juddle. So volatility shorts didn't leave in December. Um, they actually doubled down. The GME short positions and like ETF liquidity through this period hit insane lows. Which is why we saw borrow rate skyrocketing. Well, hold on, borrow rate from like there to there, just moving up, right? Yeah, with a slight dip around OPEX. Um, this is a little different than that. They literally just stepped away during this period. So, if this is the initial short, and they've just now threshold XRT, then sure. But they were still carrying obligations during this period. This time with no August OPEX, right? Like no significant August OPEX. Very similar to November. Actually, you know what? Sure. I can, because in November they really cleared out most of their obligations. So I guess it's a slightly similar setup. We'll see if we get another really big short to the downside, right? ETF FTDs were very low following December, and those all occurred kind of at once. If you guys remember, on Jan 7th, right here, and that weird fucking overnight run where we spiked up to like it was like an obscene number. We went up to like 150 overnight or something. 180. 160. Anyway. With XRT back on threshold, though, this would be October 11th this time. So that's exciting. If we see this price action overnight again. Obviously, this is something we looked for back in June and never got, so. Are you worried about the individuals that have stated that they are full port in Revlon? Not really, because I feel like those people probably just have like $500. Actually, no. ETFs started being utilized from October. So ETF utilization picked up massively in this October period. And it wasn't until December that XRT moved on to Reg Show. But if you look at liquidity in XRT from November all the way through March, it just drives down. The only relief it got was this period after it was threshold. So it drives down. You see a burst of liquidity come in when it hits the threshold list, and then it drives down again all the way into the March OPEX. I should not back away quietly with my 80% in 3K rev shares position. I mean, that's about half of what I have in Revlon. It's not like the stock's gonna just go to zero overnight, right? It's more likely to be moved to OTC. You'll be able to sell it. Covering can still occur on OTC, right? But they don't have the same FTD obligations. So obviously, shorts would prefer any over shorted stock is moved over the counter. Yep, that's pretty smart. Natty. The pound is not doing great, especially after the tax cut announcements. Yeah, we may see some speculation come in before the hearing. Ooh, that's cool. That's bullish. Obviously, getting that to scale won't be super quick. Should we start to see some FTDs emerge on Rev very soon if they're marked long on generation? Yes. Second half of August FTD report. Or first half of September, sorry. How are you planning on positioning on potatoes at market open? I don't know yet. I haven't really thought about it. I think you can just buy potato futures. But I don't know shit about the potato market and how much is like priced in already. I don't generally play like agricultural futures. That's not my thing. I know I'm in on wheat, but that's for like political, like macroeconomic and political events. Thoughts on insects held in amber over millions of years? Bullish. Thoughts on merit to Jimmy price improvement coming 3 months after the split, like Tesla and others, which would be October 21st and coincide with OPEX. Cool, but it wouldn't. Nvidia and Tesla both had different time frames after their split when covering began. The covering did coincide with OPEX, but it coincided with it wasn't like 90 days. Tesla was 70, I believe. Nvidia 40 something. Seems like an arbitrary number. However, they did coincide with OPEX. Sure. I agree. I mean, revs are liquid and low volume, so short-term analysis is, yeah, useless. Longer term still holds some water. I think the fact that it's maintained higher levels in that trend is still bullish. I mean, it at least tells you that shorts created on the drop to $1 are still underwater, right? I need a new show to start watching. Any recommendations? Um, what did I watch over the weekend? I watched a show with Stephen Merchant, called Criminals on Amazon. It was all right. Like lighthearted, not too in depth, easy to watch. Had some funny moments. Had some terrible drama. Dixie's high, so US dollar is valued high. If Japan dumps treasuries, value of bonds goes down, so interest would have to go up to balance out. This makes the US dollar go up or down? Down. Japanese sell off of US treasuries will drop the value of the dollar. It'll increase the value of the yen, which is massively over short and could squeeze. Is there a broker where you're less likely to get assigned on CCs? These are the real trading questions. Yes. Tasty trade. TC works, I assume. I assume you mean Tasty works. And WeBull are less likely to assign you. I have found. Although I've heard the same of TDA, I don't know if it's true. I haven't registered it yet, Windmill, but I'm going to today. I'm not sure if they sent me the email or not. I have to go look. It's called The Outlaws. Okay, that was it. Why do you think RP doesn't trigger a share recall and get rid of the shorts all at once? Maybe he will. Fidelity is definitely the worst for not getting assigned. They will assign you every time. I did finally get assigned on Amazon at 110. $13F, yeah. They bought 400,000 shares. It was a little while ago. You can trade currencies directly. You can trade currencies through futures. You can trade currencies through ETFs. It's all the same shit. I mean, obviously, different levels of exposure and leverage. They CC'd me? Oh, okay. It's probably in my email then. I haven't checked it this weekend, but I'll register it tomorrow. I'm not actually sure what it changes, but I'm excited to find out. I think you forget that Perelman has enough money to bail Rev out himself if he needs to. Frosty. I don't think anything about the Revlon situation will be totally normal. That's not really Perelman's wheelhouse, right? Ooh, yeah. Yeah, he's still quite rich. He's bailed out Revlon in the past. I don't know if he'll do it again, but he could. Oh, that's kind of worth it then. I'll, I'll try to check it out tonight because I usually use Epic Pen a bunch when I'm doing the pickles picks. Why did he do it before they went bankrupt? Why not? Why you never spend your own money if you can spend someone else's? But I think he would have sold or started, actively looking for like a buyout or a merger, if he had any intention of leaving the company. It's a significant portion of his holdings, and his cost basis is way the fuck underwater, and he hasn't gotten out yet, right? Well, I'll definitely check it out. All right, I guess that's about it for today. Seems like chat's died down a little. So, yeah, pickles picks. I'll have them out tonight. We'll talk a little bit about the like macro stuff that's going to happen this week. Try to get a finger on the pulse of what the indexes are going to do because they've been a bit slippery. And then hopefully we get a little rally and we can, build from there because that would be much better, I think, even for the short side. Thank you guys so much for tuning in, and I will let you know what's going on tonight. And see you tomorrow morning. Thanks, guys. Have a great rest of your weekend.